This is Pre-Market Pulse, powered by Zintch, a fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
Good morning, cobbers, and welcome to the Zintch.com Pre-Market Pulse for Monday, April 20th, 2026. Last week was one for the history books. The S&P 500 closed Friday at 7,126.06. Crossing 7,100 for the first time after gaining 4.5% on the week. The Dow rose 3.2% to 49,447.43. The Nasdaq surged 6.8% to 24,468.48, posting its longest winning streak since 2009. 52 stocks closed at 52-week highs on Friday alone. Then the weekend happened, and the weekend had other plans. The numbers at 6:40 a.m. Eastern Time. Futures are solidly red this morning as the market digests the weekend's escalation. Dow Futures, 49,383.00. Down 258 points, down 0.52%. S&P 500 Futures, 7,128.50. Down 33 points, down 0.46%. Nasdaq Futures, 26,703.50. Down 122 points, down 0.45%. The pullback is measured, not panicked. After a 4.5% weekly gain for the S&P, a 0.5% giveback on geopolitical news is orderly. But the direction is clear. Risk off is back. The weekend, ship seizure, talks collapse, Hormuz closes again. Three things happened over the weekend that changed the calculus. First, the US Navy fired on and seized an Iranian-flagged cargo ship that attempted to bypass the naval blockade near the Strait of Hormuz. Trump announced the seizure personally, calling Iran's attempt a total violation of the ceasefire terms. Second, Iran rejected the next round of peace talks. Tehran called Washington's demands excessive, and Iranian state media reported that no delegation would be heading to Pakistan for negotiations. The talks that Trump had said were close on Thursday appear to have stalled entirely. Third, Iran reimposed restrictions on the Strait of Hormuz, after briefly reopening the strait during the ceasefire period last week, which helped oil drop from $103 to $83. Tehran has closed it again. More than 20,000 seafarers remain stuck on hundreds of ships in the Gulf. The 2-week ceasefire expires Wednesday. As of this morning, there is no clear path to extending it. Oil is surging again. Oil prices jumped more than 6% in early Monday trading. Brent crude, surging back above $95 per barrel after closing Friday around $90. WTI crude, jumping above $88 after Friday's close near $83. The whiplash is remarkable. Oil went from $103 to $83 last week on peace optimism, and is now clawing back toward $95 on the weekend's escalation. The IEA warned last week that if the Strait of Hormuz isn't reopened, energy prices could go significantly higher, and it would take approximately 2 years for global oil supply to fully adjust. If oil reclaims $100 this week, the inflation narrative shifts back to the front burner. And that changes the calculus for the Fed, for consumer spending, and for corporate margins. Gold is falling, and that's counterintuitive. In a twist, gold is actually down this morning, falling about 0.7 to 1.4% despite the geopolitical escalation. Spot gold dropped to around $4,784 to $4,793, its lowest since April 13th. The reason? The dollar is surging on safe haven demand, and a stronger dollar makes gold more expensive for international buyers. In previous cycles, a Hormuz escalation would have lifted gold. This time, the market is pricing inflation risk, bad for gold, over fear, good for gold. The dollar is winning the safe haven trade over gold. At least for now. Europe opened lower. European markets are down across the board this morning as the Iran situation weighs on sentiment. The stocks 600 and FTSE 100 are both in the red, with energy stocks the only bright spot as oil surges. European investors are particularly sensitive to the Hormuz closure given the continent's dependence on Middle Eastern energy imports. Asia was mixed overnight. Asia-Pacific markets were mostly higher overnight, though the gains were uneven. Nikkei 225 fell 1.8% to 58,475.90 as investors locked in profits after Thursday's record high. Japanese markets are particularly vulnerable to oil price spikes given Japan's near-total dependence on Middle Eastern crude imports. Broader Asia, most other markets edged higher, with investors cautiously optimistic that diplomacy will eventually prevail. But the mood was tentative. The week ahead, earnings avalanche. Nearly 20% of the S&P 500 reports earnings this week. Roughly 90 companies. The headliners. Monday, United Health, GE Aerospace, RTX, Danaher, Capital One. Tuesday, Tesla, Intel, Boeing, Lockheed Martin, Verizon, SAP. Wednesday, IBM, AT&T, ServiceNow, Baker Hughes. Thursday, Alphabet, PepsiCo, Merck, Comcast, Southwest Airlines. Tesla on Tuesday is the marquee event. The stock has been volatile all year, and Elon Musk's attention has been split between Tesla, XAI, and his government advisory role. The market wants to hear about deliveries, margins, and whether the robotaxi timeline is still on track. Beyond earnings, the preliminary April PMI data drops this week. A key read on whether the economy is absorbing the Iran war shock or starting to crack. Fed Chair Powell also has a hearing scheduled, which could provide clues on the rate path. The ceasefire clock. The single most important variable this week isn't earnings or data. It's the ceasefire. It expires Wednesday. If it's extended or replaced with a permanent deal framework, the market likely resumes its rally. If it expires with no replacement and the Hormuz situation deteriorates further, the market will have to reprice risk in a meaningful way. Last week the market decided the war was ending. This week it has to decide whether that bet was premature. The read. This is a reality check, not a reversal. A 0.5% pullback after a 4.5% weekly gain is noise, not signal. The earnings calendar is loaded, the economic data is solid, and the diplomatic channels, while strained, haven't closed entirely, but the ceasefire clock is ticking. Wednesday is the deadline. Between now and then, every headline out of Tehran, Washington, and the Strait of Hormuz matters more than any earnings report. The market enters the week in record territory with momentum, but also with a reminder that geopolitics doesn't follow a script. That's your Zintch.com pre-market pulse for Monday, April 20, 2026. Good luck, and goodbye.